Hello guys and welcome again to my channel. So we're going to continue our discussion last meeting. So I have promised you that on the videos 1 and 2 about merchandising, we are going to have an illustrative problem so that we'll be able to apply what we have learned in the past two videos. And to summarize what we learned on the past two videos, I guess let me tell you like this. Because of the first and the second videos, we have been able to know different types of account titles which are absent with the accounting for service entities. So one of it is the purchases, and then the purchases returns and allowances, also the purchase discounts, and we have the freight in. And on the sales side, we have sales discounts, we have sales returns and allowances, and transportation out or freight out. Of course, we have also learned cost of sales and how to compute that one coming from the purchases and the related accounts to purchases, right? And aside from the cost of sales, we have also learned that the operating expenses can be subdivided into selling expenses and then general and administrative expenses. But there are also sometimes that there are finance expenses. So those are actually the account titles that are very much different with accounting for service entities. Okay? Right now, we're gonna use them in an illustrative problem. So here we go. So I know that these are written, these are written in smaller fonts. However, this is actually the nature of this subject. We have to economize space, and since we're having a comprehensive problem and we have to put here our answers, we have to do it like that. So if ever you'll not be able to see the penmanship here, I want you to pause the video in here and then hit print screen if ever you're using a laptop, or screen shot if you're using a phone. And then after screenshot, you have to, what do you call this? You have to crop this part. And then if you have multiple devices, that crop picture, you have to enlarge it or zoom it for your own consumption while you are watching this video. It will really help a lot. Okay? But then again, I'm so sorry. We have to do it like this because I want you to see the problem and then the answers. Okay? If we're going to make this big, then the space will not be enough for our discussion for this episode. Okay? So this is the problem. So we have here the BBG company. Supposedly, we are that one. Our point of view is of the BBG company. So it has a trial balance at November 30, 20X5, and it is below this one. So from cash until the GLET says equity, 1,320,000. Again, that's for November 30, 20X5. So they're already beginning balances for some accounts. Now, next part is the other account titles that will be used. Why? These account titles, including the account titles used in the trial balance as at November 30, 20X5, those account titles will be used here in the transactions for December 20X5. So we have here the purchase, the sales, and other transactions for December 20X5. Again, this is the trial balance as at November 30, 20X5. Supposedly, if the company started on January, so January to November 30, 20X5, it resulted to this. And then we have to analyze the December. Okay? And on the December, we have the regular transactions from December 1 to December 30, and we have the transactions for adjustments as part 2. Okay? Now, let's do the journal entries and the identification of transactions for merchandising entities. Actually, we're going to do the step 1 to 10 still for merchandising entities. In my mind, you're already masters for the accounting cycle on, what do you call this? um, on the service entities. So let me first turn on the lights so that you'll see me. It's hot in here and I'm a little bit sweaty. So, oh no. Let me change the focus. Yep. Wait. Okay. So, so that you'll be able to see me. So, first off, let's have on December 1. On December 1, the BBG company paid the accounts payable of 115,000, but we have to less it by 2% discount. So what does it mean? Maybe we paid within the discount period. So we have enjoyed 2% discount. So let's get the numerical figures for this. So where's my calculator? Oh no. Couldn't seem to find the calculator app. Calculator. Hey Google. I saw it. I've seen it. I've seen it. Okay. So 115,000 supposedly is the ones that you're going to pay. However, it will be deducted by 2%, which is 2,300. So what will happen on the entry? So the entry will become, first, you have to debit the accounts payable because you have to decrease it by how much? So even though you have enjoyed 2% discount, you're going to debit 115,000. And then the cash. The cash will become 115,000 minus 2,300. 2,300 is the 2%. So 115,000 times 0.02, that's 2,300. So if we do that, the payment is only actually 112,700. And since the entry is not balanced, of course, you have to use again the purchase discount. So our point of view right here, since we are the ones who has an accounts payable, we are the purchaser. So we're gonna use the purchase discount. Again, that's 2,300. That's it. That's the entry for December 1. Now let's go for December 2. On December 2, you have received collections. So since here, we're talking about accounts receivable, then that means our point of view here is we are the seller. So if we are the seller and we have sold on account, we are going to receive such collections. So what will happen? Of course, you'll receive cash. However, according to the problem, it should be less than 3% discount because maybe the customers paid within the discount period. So 180,000 times 0.03, we have 5,400. Okay, so that means on the 180,000 minus, to save space, you have 180k. You're not going to receive already the 180k. You're only going to receive 180k minus 54, which is 54 is the 3%. That's 174. 174, 600. And then your accounts receivable should be credited. should be lessened. By how much? Of course, it's still 180,000 even though you only receive 174,600 because there is a sales discount of, again, 5,400. So that's how you use the purchase discount and the sales discount. Okay? Now, let's go to December 4. I thought this is what do you call this? We can discuss this faster. I guess I was wrong. So as long as you can still follow, we're good. Let's go to December 4. What will be the entry for December 4? For December 4, you have sold inventories on credit to BBG Supplies. So we are BBG company. BBG Supplies is actually our client or our customer. So since we sold inventories, you need to remember that the point of view that we are taking for December 4 is of the seller. So we are the seller. So sold inventories on credit to BBG Supplies, 210,000. The terms are FOB destination, 3, 10, and 30. So what does this mean? Again, the FOB destination, it just means that the seller should be the ones who will pay for the freight. So as easy as that. Okay? The should be who will pay the freight is the seller, FOB destination. And then the 3, 10, and 30, if the customer or BBG Supplies will pay within 10 days, it will enjoy 3% discount. Okay? So BBG Supplies paid the shipping expenses of 3,000. So the customer paid for the supply. So the customer paid for the freight. Okay? So in short, that is freight collect. Which means, since our point of view here is we are the seller, we should be the ones who will pay the 3,000. But since this is freight collect, then the customer paid for our responsibility. So that's very important. So there are actually two transactions here. The first one is the selling of the inventories for 210,000 on account. So we have to account it debit, accounts, receivable, 210,000, and then credit, sales, 210,000. Now, how about the freight? That's the second transaction here. Again, FOB destination, freight collect. We are supposed to pay for the freight, but our customer actually paid for it. So what will happen? Since you are the ones responsible for paying, we use freight out. Freight out, is there an account here in the chart of accounts, freight out? Yes, there is. So we have to record freight out because again, we are the seller. Freight out, that means transportation out. The merchandise will be going out of our company. So meaning, any cost incurred for transportation is called freight out or transportation out. Okay? So freight out, how much is that? 3,000. And we're not going to credit cash because again, the client paid for the freight instead of us. So what will happen is that we're going to deduct the client's debt. Because the client paid for something that we should pay. Actually, it's just like that. Okay? Again, if FOB destination, the seller should be responsible for the freight. Okay? So that's it for December 4. Let's go to December 5. BBG Supplies, our client, returned 25,000 worth of goods. So, if that's the case, we're going to make an entry, sales returns, and allowances. Because again, our point of view here, when we talk about BBG Supplies, we are the seller. So if they return something, that sales returns and allowances on our part, that's 25,000. And then credit, accounts receivable. So we are not going already to collect money worth 25,000 because they returned the item. Okay? So that's December 5. How about December 6? In here, our point of view will shift because we purchased merchandise from Bruno Mars products, 232,000. And since there are terms, FOB shipping point 210 and 13, it is already assumed that we purchased it on account. We did not pay cash immediately for those merchandise that we purchased. Okay? So, what will happen? Again, our point of view will shift. So, purchased merchandise from Bruno Mars products. Bruno Mars is our supplier, 232,000. The terms, FOB shipping point, that means the ownership of the goods will transfer upon shipment. So that means the in-transit inventories, freight, should be shouldered by the buyer. In which case, we are the buyer here. Okay? So we should pay for the freight. Let's see what happened. Baby G company paid for the shipping, 2,000. So we paid for the freight, actually, and our responsibility is also to pay for the freight. So there's no problem with that. Okay? So what will happen? Of course, again, there are two transactions here. The first one is the purchasing on account, which is debit, purchases, credit, accounts, payable. How much? We have 232,000 and then 232,000. Again, in this transaction in December 6, we are the purchaser or the buyer. So what's next? The second transaction is about the shipping cost. So again, FOB shipping point. So the buyer should be the ones who will pay for the freight. That is the meaning. So if that is the case, since we are the buyer here, we have freight in. Do we have freight in here? Yes, freight in. The freight in is 2,000. Did we pay actually? Since this is freight collect also, BBG company, which is us, paid for the shipment. So that means you have to credit here cash. So the trick here in analyzing merchandising transactions is first knowing what is your point of view, because you have two point of views here. You either purchase or you will become the seller. Those are the two point of views. Okay? So that's it for December 6. Now let's go to December 9. December 9, we returned goods worth 12,000 to Bruno Mars. Again, Bruno Mars is our supplier. We return goods. I don't know what is the reason. It's not given in the problem, but we return goods worth 12,000 to Bruno Mars products. So what will happen? Of course, if we return something, our accounts payable will be deducted, of course. How much? 12,000. So, 232 minus 12, 220 only. We have effectively purchased only 220,000 because the gross is 232 but we returned the 12,000. So, what is that? Purchase, returns, and allowances. That's it. 12,000. That's it for December 9. Okay? Let's go to December 10 as if you already understood. On the December 10, the transaction is paid interest for loans, 8,000. So, let's see. What are the accounts in the chart of accounts that could be used? We have interest, expense. Okay? And then, cash, of course. You have cash. Because you paid for interest daw. So you have 8,000 and then 8,000. That's it. Now, let's go to December 11. Receive collections from BBG Supply. Again, BBG Supply is our client or is our customer. So, our story with BBG Supply started in December 4. We sold 210,000 to them. And they paid for 3,000 freight, if I'm not mistaken. So, that's on December 4. So, this is our entry. Okay? But then again, do we have others? Yeah. That's BBG Supplies right here. And then on December 5, BBG Supplies returned 25,000 worth of our goods. So, from selling 210,000 minus 25,000, because they returned the 25,000, we effectively sold only to BBG Supplies 185,000. But since they paid for the freight, which is our responsibility, if you can still remember, they should pay 182,000 only. Okay? However, there's a twist. The twist is this 310 and 30. So, we sold that December 4, they paid on December 11. So, that means before the 10-day period, right? So, they are going to, what do you call this, enjoy 3% discount. So, what will happen on the entries? Of course, what will happen is that we will receive cash. The question is how much. Okay? And we will credit accounts receivable. So far, our accounts receivable from BBG Supplies is actually 210,000, and then minus 25,000 again, that's 185, yeah, 185,000, and then minus 3, that's 182,000. We are not going to receive that full 182,000. What will happen is that the cash that you're going to receive is, first, you have 210,000 minus the returned ones, 25,000. So that's the first solution that you're going to make. So supposedly, we have 185,000 to be collected. Times, if you wanted to shortcut the solution, times 0.97. Okay? Okay, 210 minus 25, we have 185,000 times 0.97. So, what will happen is that 185,000, they will enjoy 3% discount, which is why we cannot use the times 1 or 100%. It's only 0.97. That's 1 minus 0.03. We have 179, 450. 179, 450. But since they also paid for the freight that should have been paid by us, then minus 3,000, you're only going to receive 176,450. So that's the debit, and then the credit is actually 182,000. Of course, another debit. So again, the accounts receivable is 182,000. and we have sales discount. Again, how do we compute the sales discount? So the sales discount is actually, supposedly, the original that we have sold is 210. But then, they returned the 25,000, so 185,000 times 0.03. Let's see if ever the entry will be balanced. So 185,000 times 0.03. 5550. Okay. Plus, try. 176 plus 176, 450. Yeah, it's balanced, 182. So that's the entry for December 11. But let me make it clear so that you will understand. First off, we talk about the accounts receivable from BBG Supplies. How did we get the 182? Again, we sold originally 210,000 to BBG Supplies. However, they returned the 25,000. So of course, our accounts receivable will be deducted also. So 210 minus 25 is 185,000. Now, if you still remembered, they paid for the freight. Okay, BBG Supplies paid for this 3,000. Even if the shipping terms is FOB destination, the meaning of FOB destination, the seller should be responsible for the freight. In that case, we are the seller here in December 4, which is why we deducted our accounts receivable, because the client paid for our responsibility, which is why we have this 182. So 210 minus sales returns of 25,000 minus the freight that should have been paid by us, and they actually paid for it. So that's 182. Okay? How about the sales discount? The sales discount is again coming from 210,000, the original sales to BBG Supplies, minus the returns of 25,000, we have 185,000. They are entitled to get 3% discount on the 185,000. So we have 5,550. Okay? Actually, you'll be able to get this cash if ever 182,000 minus 550 discount, you'll have this cash, 176,450. However, if you do not want that type of solving, like 182 minus 5550, the remainder will be 176,450. Here's what happened. If you don't like that, so 210 is the original, minus the sales returns from BBG Supplies, we have 185,000. So, of course, BBG Supplies will not pay 185,000 because they paid within 10 days or the discount period. So, what are they gonna pay? 100% minus 3%, it's 0.97, which is 179,450. So, from 185, they are to pay 179,450. Okay? If we're not going to include the freight that they have paid when we should have paid it. Okay? So if we include the 3,000, of course, 179,450 minus 3,000, you are only going to get 176,450. I hope that's clear. Okay? So that's on December 11. December 12, another customer, I guess, because you sold merchandise to Silk Sonic, 330,000. So since there is a shipping term, FOB shipping point, so the freight should be paid by the buyer. We are the seller at this point, so the buyer should pay for the freight. And then 310 and 13, so there are credit terms, so that means we sold again to a customer on account. So what will be the entry for that one? So debit, accounts receivable. 330,000. Credit, sales. That's it. That's the only entry. There will be another entry if ever they paid within the discount period, if ever. So, again, if Silksonic, one of our customers, will pay within 10 days, they're going to enjoy 3% discount. And we did actually, on December 18, we collected from that particular customer. So what will happen? We're going to receive cash. And then we're going to credit accounts receivable from Silksonic. So accounts receivable is 330,000. But the cash, we're not going to get the full cash because 330,000 times 0.97 only. Why again 0.97? It's because from 100%, since Silksonic paid within the discount period, minus 3%. 100% minus 3% is 0.97. So, yeah, 330 times 0.97. So we have 320,100. 320,100 instead of 330. So since the entry is not balanced, we have to recognize again sales discount. Sales discount is about 9,900. And I guess that's already balanced. Okay? So, that's how you make an entry. I guess the December 11 is the ones that you should study more because it's a little bit complicated, but it's actually not. Okay? So, we have December 18 already. How about December 19? Sold merchandise to hooligans. So, another customer again. So our point of view here is the seller again. So we sold merchandise to hooligans, 242,000, and we have FOB shipping point 310 and 30. So FOB shipping point, that means the seller should pay for the freight, so the hooligans. However, in here, Baby Jeep company paid 5,000 freight. We are the ones who handle the freight. So again, there are two transactions here, and our point of view is the seller. So, you have accounts receivable, how much is the accounts receivable? The accounts receivable is 242,000. And then, we have credit sales, 242,000. That's the first transaction. The second transaction is we paid for the freight, which is not our responsibility. As a seller, if FOB shipping point, the freight should have been paid by the buyer. And we are not the buyer. So what will happen? We're not going to record any freight out. Instead, we're going to add that on their account. So debit, accounts receivable, 5,000. We have to collect it from them. So aside from 242, their debt will become 247,000, including the 5,000 freight that we have paid. When supposed to be, they should pay for the freight. Okay? So accounts receivable, 5,000, and then credit cash, 5,000. So that's the entry for December 19. How about December 20? So on the December 20, we have paid 9,000 for representation. So what is the account that we're going to use here? We have representation. So debit, representation as an expense. 9,000. Alright? And then, credit, cash. 9,000. I mean, that's it. Okay? That's it for December 20. Let's go to December 29. Hooligans returned merchandise in the amount of 18,000. So, on December 19, mga 10 days later, hooligans returned the merchandise worth 18,000. So, what will happen? You have to record sales returns and allowances. So from 242, we have to deduct our sales. The net sales that we will have to hooligans, the net sales, 242 minus 18,000. And then, credit, of course, your accounts receivable will be deducted also by 18,000. That's it. So 242, it was added by a fleet that's supposed to be handled by the hooligans, minus 18,000 for the merchandise that they have returned. So that's our accounts receivable only. And on December 30, the owner withdrew merchandise costing 20,000. So even if the owner withdrew merchandise and not in the form of cash, the entry will be the same. What is our account title here? Let's drawing. Okay. So let's have let's drawing 20,000 and then credit. What is the credit that we're going to put here? I guess let's credit merchandise inventory 20,000. Yeah, let's credit merchandise inventory 20,000. So when we compute for the cost of sales later on, we have to remember this because that is a twist also. Okay? Now, let's go for the adjustments. Okay? So, in order to make the video short, let's have the regular transactions only. So, as you can see, we have already applied what we have learned on the past two videos. So, if you wanted to visit those past two videos, it's in this particular playlist still. Okay? Let's have the adjustments after this episode. Okay? Thank you for watching and see you on the next one.